The basic principle of the market is auction. Traders search for and create volume, and the price moves between these volume areas. That's why in this video we will look at how to use the session volume profile to determine the trend and identify the best zones for buying and selling. When you know where traders see a good price to buy and good price to sell, it can increase your chances of success by up to 100%, which is a decent number. That's why it's a good idea to include the session volume profile in your key level analysis, simply because it's game changer. So let's dive into it. You can enable the session volume profile in ATAS simply through the indicators tab. In TradingView, the process is very similar. However, on TradingView, the session volume profile is included in the paid plan, while in ATAS, it's free. That's why in today's video, I will use ATAS. Once you enable the session volume profile, you will see something like this. It may look chaotic at first, but we will quickly fix that and bring some clarity to that. For you to don't have to spend the time digging through the settings, you can simply load my template, which will adjust everything exactly the way I have it right now. Right now, I use Bitcoin chart because most of the time I trade Bitcoin, but you can use this theory on any other markets as well. It doesn't matter if you trade gold futures, crude oil, Bitcoin futures, or stocks. The market auction theory works the same way across all markets. So, for you to understand this theory, you need to understand what is volume profile in general and what it's made of. The volume profile consists of these main concepts: volume area high, volume area, point of control, and volume area low. Most of the time, the market moves sideways and stays in a balance. This is called the volume area. It's the zone where the most trading occurred during a given period. In other words, where traders found value and the market was in balance. The areas outside the volume area are zones that traders perceived as expensive or cheap for buying or selling, again, for that specific period. So, if the price enters these zones outside of the volume area, it usually pulls back into volume area zones again. So, everything which is above the volume area high is considered as expensive, and everything what is below the volume area low is considered as cheap. And the volume area, most importantly the point of control, POC, is considered as the fair price, the balance. That's the theory of the volume profile, and now let's look at how to identify the trend and key zones for buying and selling using the session volume profile. The session volume profile measures zones for each trading session. For BTC futures, that's each day. So in this case, each volume profile represents the fair value areas along with the cheap and expensive zones for each individual day. And here comes a very important part of the video. While analyzing a trend, what we focus on are the profiles from previous days, not the profile from the current session. That's because the volume profile from the current session is still forming, and the volume areas change dynamically through the entire session. So, we look at how the volume areas from previous sessions have shifted. If we see that the volume areas are moving lower and breaking previous volume areas and POCs, it means the market is in a downtrend, and traders are accepting lower and lower prices, because that's where they are finding volume. So, during the downtrend, the volume areas, POCs, and possibly the volume area high levels from previous sessions serve as an excellent zone for selling on lower timeframes. Think of it like a classic market structure. When volume areas gradually move lower and break previous volume areas, the price will likely bounce downward on a retest of those previous volume areas. And the same applies for bullish trend. If the volume areas gradually shift higher and breaks previous volume areas, the market is in a healthy uptrend. And on the pullback, you want to look for long opportunities. And now it's time to focus on the current session volume profile. You can use it as a confirmation for a given zone. Let's say the price is in a downtrend and reaches the level of previous volume areas. If the current session price is above the volume area, there's a high probability that the price will bounce off of the previous volumes back into current session volume area volumes. And this is absolutely game changer. Because this is the range that you can short. Because from the current session's perspective, this is very good price to sell, as it's value area high. And as it aligns with the volume that caused the sell-off in the previous session, this zone is twice confirmed. And you can use this zone, this area, as a key level where you can monitor order flow and absorption on lower timeframes. I won't go into exact steps here because we teach that in our A to Z order flow course, but if you are interested, you can try part of our course for free on our website, with no registration required. I'll leave a link in the description of this video. However, now let's move to a long scenario. If the price forms value areas at higher levels and breaks the old ones, these again act as strong support zones in an uptrend. You can again use these POC and value area zones from previous sessions as key levels for potential longs, and the value area or POC of the current session can be used as a target. Why? Because the volumes from previous sessions that push the price up will defend these levels. And when we add to the fact that in the current session we are at the value area low, a very good buying zone, we have a precise range from where we want to go long. After that, it's just a matter of monitoring the order flow on lower timeframes around these zones. In this example, I entered a short trade. From the session volume profile perspective, I'm in the zone of previous volumes that caused a sell-off. At the same time, I'm above the value area from the previous session, and also at the current session's value area high, giving 3 strong confluences for selling. On the higher time frame, this is very strong resistance zone. So my plan was to short from these zones down to POC of the current session. So the session volume profile is a great market map. You can then combine these volume levels with price action levels to get even stronger confirmations. So, a little recap of this video. Once you see the value areas and POCs from previous sessions breaking the value areas below them, it's a downtrend and you can enter short on the pullback. Ideal situations are when the price tests these levels while also being above the current session's value area, giving you clearly defined path for the move. So the volume zones, value area zones from previous sessions are the key levels from which you short, and the value areas from the current session are the levels where you take profits. Once you see the value areas from previous sessions gradually rising and breaking the value areas of earlier sessions, it's an uptrend, and on a pullback you want to focus on longs. Again, the ideal precise zones are previous POCs, while the best zones for taking profits are the value area and POC of the current session. And the final trigger points, in our case, are order flow patterns, such as, for example, absorption. I hope you found what you were looking for in this video and that it provided you with some value. If you are interested in my trading style and want to learn it in depth, check out our website or watch a series of live trading videos where you can see exactly what we teach in a live market. If you have any following questions about this video, feel free to ask in the comment section down below. Thank you so much for watching, and I'll catch you in the next one.